Welcome back. Now let's invite the management of Granules India. They reported a strong set of Q3 numbers. The top line growth was at 22%. Margins were healthy. We have with us Priyanka Chigurupati, Executive Director, Granules India, on the show now. Thank you very much for joining in. This is Rima here. So Q3 was strong, top line growth of 22%. For 9 months, your top line is at 18%, EBITDA margins at 21%. Now, 9-month performance is ahead of your earlier guidance of mid-teens revenue growth. What are you likely to end FY26 with in terms of a top line and margin performance?
Good morning, everybody. Thanks for having me. Yes, certainly we had a good quarter. We had a YOY increase of 22% in revenue and about a 28% increase in PAT. And if you set aside our acquisition loss, our growth in PAT has been about 45%. So we've certainly had a very good quarter. Going forward, we are still in the process of remediation, for the warning letter remediation. So depending on that, we should see the next couple of quarters roll in. But we do expect a very positive outlook for Q4 because a lot of the remediation activities have gone up and our capacity utilization is finally going up.
Okay, so expect a positive Q4. On this remediation, you said a post-warning letter meeting was held with the US FDA in early January 2026 on the Gagillapur. What is the next step? When do you expect it, a full and final closure on that?
So we had a good meeting with the FDA. We had a constructive conversation with the FDA. They asked us to send in some documentation, which we have sent in, and we're continuously in correspondence with them. So in terms of the outlook, it really depends on what the FDA thinks of our remediation activities. And if they want, they can come as soon as tomorrow or a few months down the lane. But we do expect them to come for a review before we move forward. But that said, I continue to say that our existing products, we haven't seen any dip in performance. We continue to gain share in most of the products that we already have approved. Right now, it's only the products that are still pending approval that are stuck with the FDA.
Priyanka, good morning. Just one thing, you said Q4, of course, is looking much stronger. Can I take the timeline a little forward? If you want to put out some numbers for what you think FY27 will look like? I mean, what is the aspiration internally?
Look, I would love to give you some guidance, even internal aspirational guidance. But like I said, a lot of it has to do with the FDA remediation. If they come in as soon as tomorrow and do a remediation, give us a clear chit, we have about 10 to 13 approvals that are still pending. So launching all those products is going to be a big win for us. So you could see the numbers go up significantly over the next in FY27. But again, at this point, it depends on the GGP remediation activities.
Okay, all right. Hi, Priyanka. Good to see you. And let's talk about a couple of other factors then. Earlier, you all were guiding that the net debt number comes down by around 10 to around 15%. Do you stick to that guidance? And in that sort of a backdrop, could you tell us, you had approved raising close to 1,700 crores. Break it up for us. What will this be used for?
I'm sorry, can you just repeat your question? You cut off.
The debt number you all had guided earlier, that would come down by around 10 to around 15%.
Yes.
So do you stick to that? And also you all have approved, raising some money, 1,700 crores. Yes. So break it up for us. What would this money be used for?
Well, right now, the money that we're raising through the warrants issue and the primary infusion is primarily to strengthen our balance sheet. Because we are looking at some potential opportunities, inorganic opportunities. Nothing concrete yet, but if you look at our portfolio evolution and our strategy evolution over the last couple of quarters and last couple of years, it's been playing out really well, where the percentage of what we call our integrated generics versus complex generics has gone down. So the complex version has gone up, which means that our strategy of our ADHD control substance strategy, our oncology strategy, our complex product strategy has been playing out pretty well. So we are looking at growth within the complex generics range, and that's why we want to strengthen our balance sheet in case a great opportunity comes our way.
Okay, so the fundraise is not to accelerate deleveraging, but rather to look at inorganic opportunities in complex generics.
I just want to correct that. It is to strengthen the balance sheet. So we do want to get rid of some of the debt and that way strengthen it if an opportunity comes up going.
What is the debt deleveraging target by FY27? Is there a number?
We always want to have our net debt EBITDA ratio below 1. I think that's a comfortable level.
Priyanka, but it's quite interesting with regard to this inorganic opportunity that you're looking at. Do you think that the next couple of quarters in the first half of next fiscal, we could hear something? And what's the company's appetite in terms of how big do you all want to buy it? What could the acquisition size be, since you're looking at a few?
Well, see, right now we're looking at multiple, right? But we're not going to do anything that is outside of the focus of very strict focus of what we're doing right now, which is the complex generics area. But we are being very prudent with our capital outlay because we already have our Sen acquisition that happened that still has to play out. So considering that, considering our a net debt EBITDA, I guess the prudency over there, we would like to limit the spend. We won't do something that's outside of a comfortable balance sheet level.
So complex generics, I believe, is now 49% of finished dosage revenue?
Correct.
So without an acquisition, considering that is a focus area, it's growing well, what will that contribution go up to? And if you do an acquisition, till what level are you comfortable with?
Right now, yeah, if you see the integrated has been about 47 to 50 range, and 49 has been complex generics. And complex, we break it down into 3 to 4 segments, one of which is oncology and controlled. And like I said, extended release, modified release products that also contributes to complex generics. So we expect that to significantly grow over the next 2 years. And we just got 2 approvals. We've announced that in 2 tentative approvals that we've announced over the last 2 quarters. In Q3, we got an approval for tentative approval for generic Adzenys, which is again for treatment of ADHD. That's a limited competition product with an addressable market share of about $170 million. And we also got approval for another product, tentative approval for generic Dynevel, through which we're eligible for a potential first to file opportunity. And that has an addressable share of 41. So the number of organic R&D filings in complex itself are going to go up quite significantly with a good target for this year and the upcoming year. And the oncology side of things haven't even started yet. So all the filings are happening. We'll see them happening from next year onwards. So you'll see a significant increase in the contribution of complex generics as a percentage of whole.
All right, Priyanka, let's focus on a smaller part of your business, the peptide slash CDMO business. Currently, it's doing a quarterly run rate of around 32 crores. How do you see this number scale up? If you want to give us a quarterly number on an annual basis, and also at when does it break even?
Well, I'll actually answer the second point of your question first. We, in our last investor call and in this investor call, we mentioned that we expected to break even in Q4, if you look at it on a quarterly basis. But this business is, like you can imagine, a CDMO business has its ups and downs, right? It's not it's not a straight up growth in terms of trajectory. So we do expect this year to close at a decent level with a break even. And our strategy right now is to focus on AEDs and fragments, and also a part of the cosmetic industry. But the long-term growth is in complex fragments converted to API. So it depends on how quickly we're able to use our existing relationship with innovators and make our pathway through to them. And that'll determine how quickly we grow in this business.
Okay, so break even in Q4 FY26. Thank you very much, Priyanka, for joining in. There's a word coming in on Granules. Time